So with unaffordability being basically the worst it's ever been in Canadian real estate, if you live in the GTA or the GVA, your first investment property is likely not going to be in the area that you live in. And that's exactly why my first investment property I purchased 4 hours outside of Toronto in an area, I believe 4 hours, in a city called Windsor, Ontario. And the reason I bought there is because the house was $150,000 and it cash flowed $350 a month at the time I bought it in 2019. But the purpose of this video isn't really to go over the numbers, it's to tell you how I managed to buy a property in a place I've never been and a property I've never seen. To this day, I've still never stepped foot in Ontario, and I actually just sold this property. So how did I manage to safely do that? I'm that Agent Kelly. If you guys want more content like this, Canadian real estate, my local market of Abbotsford and the Fraser Valley, please do hit the subscribe button. And if you want to chat, you can do so by clicking on the link and booking a call into my calendar. The link is in the description, first link in the description. So for your first investment property, you really don't want to be putting yourself in situations where you're losing $1,500 a month after all, expenses paid and you collect the rent. In the event that the tenant stops paying, now you're just hemorrhaging money. So for that reason, I would recommend that you buy something that's slightly cash flow positive, neutral, or at the very least, as close to neutral as you can get it. So you'd likely be looking at markets like, Saskatoon, Calgary's suburbs, Sudbury, Ontario, I heard is pretty decent, Moncton, New Brunswick, Newfoundland, etc. So the first step to buying an out-of-province property that you've never seen before without having to drop in and, be on foot and go see these properties, because obviously that takes a lot of time, money, and effort, is to pick a market that you would like to invest in. So I would recommend to find this information watching YouTube videos, and I'd personally recommend watching YouTube videos that other investors put out, maybe not realtors. I'm a realtor myself. I probably wouldn't be watching realtor videos in that market to find out if that's a good market to invest in. But an even better source of information that I found is the Bigger Pockets forums. So Bigger Pockets is basically just a Facebook for real estate investors, and both times that I bought properties out of province, I went into the forums there and was just, asking investors, where are people investing in 2023? Where are Canadian investors investing in 2023? What's the best market? And then there's obviously, a few different people talking about a few different markets. I landed on Windsor, Ontario, did my research on that, and then it ended up working out very well. And obviously I recommend you pick somewhere that's cash flow neutral, cash flow positive, or at least very close to being cash flow neutral, has a diverse economy. So the jobs come from multiple different sources and a growing population, or at least an economy that's starting to become more diverse, which was exactly what Windsor, Ontario was. It was tied to the auto industry for a very long time, but they started having a tech sector. They were building a new bridge. They were renovating universities, etc., etc. Calgary's kind of doing the same thing now, where they were heavily tied to oil. Now they have a growing tech sector. Places like that. Now, once you've picked your city, how are you going to buy a property there without being there? Well, the next step is finding a realtor that you trust. And again, Bigger Pockets is probably the best place to find a realtor that other investors use and trust within that market. And I'd recommend interviewing 3 of those agents and going with whoever, gives you the best gut feeling. So now that you have your realtor you trust, you're going to need a property manager that you trust. Now, the thing about the property manager is it should not be a recommendation from the realtor. Again, you want to go somewhere else. Either just Google them and call a couple of them, or, reach out to an investor on Bigger Pockets and ask if they have a property manager. And the reason why you don't want those two knowing each other is because that's going to give you the best chance at getting an unbiased opinion from both sides that you can contrast with. For an example, realtor sends you a property, you send the property to the property manager. This realtor says, hey, it's a good location, it's this, it should rent for that, awesome property. You send it over to the property manager, that property manager is going to either confirm the things that the realtor just said, or they're going to tell you something different. They might be like, yeah, that's a good property, but the tenant pool is this and blah, 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 right? But either way, you're going to get an unbiased, I would like to think an unbiased opinion from that property manager because they don't know the realtor, but also you and the property manager should have aligned interests, because you don't want to be owning bad quality properties in bad quality areas, because then you get a bad quality tenant, and they don't want to be managing bad quality properties in bad quality areas because they don't want to be managing bad quality tenants. So now you have the realtor you trust, the property manager you trust, you both agree this is a good property. The property manager tells you roughly what rent you can get from owning that property. Now, the last thing you're going to do is you're going to write an offer subject to inspection. You are going to get an inspection on this property, and again, you're going to use an inspector that the realtor doesn't know, or at least doesn't have a relationship with. That inspector is basically going to confirm that yes, the property exists, and yes, it's in good standing, and there's no major items that need to be dealt with right away, or whatever the case may be. But now that you've done that, you've basically confirmed that A, this is a good city to buy an investment property in, B, it's a good location within the city that seems to be a good city to buy in, and the property seems to look good, and C, the property actually exists and it's not in a state of disrepair. So now you've essentially covered everything you need to know, most of the risks associated with buying a real estate investing in real estate, and you never actually had to go to the city, walk into the properties, view these properties yourself. You can even get your realtor to shoot you videos of the property as they view it. I do that all the time for out of area investors. And 20 years ago, this wasn't an option, but today with technology, I would say you don't actually need to visit the property, and some people might argue with me with that, but you know, I've done well myself not actually visiting the properties, so I would say you probably don't need to do it. Yes, it's better if you do it, but it's not a necessity. If you enjoyed this video, do not forget to subscribe. I'm that Agent Kelly. I'm making moves to move you. Peace.